How's it? Welcome. So in this installment we're going to be looking at the limitations that the National Credit Act imposes on microfinanciers when it comes to interest and fees. And for the purposes of this discussion, we'll be covering credit agreements or small credit agreements. Now, we will be dealing with all the other credit agreements in subsequent videos to this. But for now, small credit agreements. So what is a small credit agreement? There are small credit agreements in the agreement where the capital does not exceed 8,000 Rand and the term does not exceed 6 months. And this is true for any one of these parameters. So if any one of these parameters gets exceeded beyond the minimum requirement, or the maximum requirement rather in this instance, then the agreement will become an unsecured credit agreement. It will be a longer term agreement, and then different fees limitations would then apply to those agreements. So let's hop right into it. So we often get asked by our clients, can I charge 30 or 35% interest on a loan or a credit agreement that I have done? And the short and simple answer is no. It is not that simple. It's not that easy for us just to say that that's what you're going to charge. Because a loan is made up of several different components. So first we have the capital component, and that's a capital that you will be lending to your customer. Now let's look at where does your money come from? Where do you make money? Well, a loan is made up, the profit components of a loan is first of all interest, then initiation fee, and then your admin or service fee. So let's look at interest. So interest is a monthly interest rate, so it's calculated monthly. So interest for the first loan in a calendar year will be charged out at 5% per month. Thereafter, the National Credit Act requires that it be charged out at 3%. So basically, in short, what I'm saying is that, or what the National Credit Act rather is saying is that the first loan for a client will be at 5% per month, and then the subsequent loan to that, or any other loans in that calendar year, will be at 3% per month from an interest perspective. Now, what does that mean? Well, if a client takes a loan on the 1st of January as an example, and he pays it back on the 30th of January, that loan will be at 5%. If that customer then takes another loan on the very same day that he repaid it on the 30th of January to be paid back on the 28th of February, then that loan would be at 3% per month, or the interest would be at 3% per month. Now, a similar example is if a client or a consumer takes a loan on the 31st of December, that loan would be at an interest rate of 5% per month, and he repays it and he takes another loan on the 1st of January the following year, then that loan will also be at 5% because it's a new calendar year. Now let's look at the initiation fee. So the National Credit Act allows you to charge a flat fee per agreement of 165 Rand for the first 1,000 Rand. Thereafter, it is 10% of the capital, and it can never exceed 1,050 Rand. This is vitally important. Now, Quinn Pay does all of these calculations for you. With regards to your admin fee, the admin fee is a monthly fee, but the National Credit Act is very particular in the fact that it has to be prorated. So the admin fee is 60 Rand per month, but you cannot charge a consumer the full 60 Rand if the consumer only has the benefit of the loan for 15 days out of the month, or for 5 days, or whatever the case might be. So you have to prorate the service fee. Now we add all of these things together, and that's where you make your money. Now, you will find in loan management systems, including ours, you will have a thing called a deferred amount. Now, what is a deferred amount? Well, the National Credit Act makes provision that a consumer can pay the initiation fee portion of the loan upfront at the commencement of the agreement. This option has to be made available to the consumer. Now, if the consumer opts in not to pay the initiation fee upfront, then it gets added to the loan, obviously. But the National Credit Act allows for us now to add that initiation fee to the capital and then charge the consumer interest on that amount. And that capital plus the initiation fee, that becomes the deferred amount, because we are deferring the charging of the interest on that. And that is as simple as it is. Now let's dive into a couple of other things quickly. So what are the VAT implications? Well, if you are a VAT registered business, you are entitled to charge VAT on certain components of the loan. So obviously you cannot charge VAT on interest. It is a non-VATable item. But you can charge VAT on the initiation fee, and you can charge VAT on the administration fee or service fee. Now Quinn Pay does all of these calculations for you. We have advanced formulas built into the system to ensure that you comply with the requirements of the National Credit Act and by extension the National Credit Regulator. If you have any more questions, comment on the video, let us know what your views are, and we'll see. And if there's any other topics that you would like for us to cover and discuss and provide more clarity on in a simple, straightforward, common language way, let us know. Comment on our videos, send us a message, and we'll definitely do that for you. Have a fantastic day, guys. Cheers for now.